Hello and welcome to Crypto Bible. My name is Oliver, and in today's episode we're going to be talking about this big dip and what's been happening in the market of crypto. We've seen Bitcoin drop down about 9%, Ether's down, and we're going to have a little chat. I've got some news articles that I want to share with you, which might give you a bit of insight into what's happening and what should we do. Now, before I get into today's news, it would be great if you could throw me an early like, get yourself subscribed to the channel, and hit the notification bell icon on so you never miss any of our upcoming content related to the news or any other content pieces. Right, let's get into the market and see what's happening with crypto at the moment. So here we have it, coin market cap, trending coins. We've got DeFi, DegenLand, we've got Mars, Floki, Inu, and Bayako, top three trending coins. Then we've got the biggest gainers, Project X nodes, Mars, Floki, Inu, and Tudor Birds. Now, as I go down and we look at the top 6 coins that we can see in sight, we can see 9% down in 24 hours. Bitcoin now $37,000, 945.56. Ethereum down 11%, and it's not looking great at the moment. It seems to be dropping quite quickly. What's going to happen tomorrow? We don't know. Let's jump into the first news article of today. Okay, let's jump straight in. This is from CNBC, and the tagline is "Cryptocurrencies tumble with Bitcoin falling 7%, Ether down 8% in the last 24 hours." Now, the key points are Bitcoin fell more than 7% in the last 24 hours, and Ether dived more than 8%, according to CoinDesk. Around $147 billion were wiped off. That's just an astronomical figure. It wiped off the entire cryptocurrency market over the last 24 hours, according to data from coinmarketcap.com. It came after Wall Street's losses on Thursday, with the Nasdaq down 5% this week and the S&P 500 into its third straight week of losses. Bitcoin fell sharply Thursday night, while Ether prices also dived, wiping off nearly $150 billion from the crypto market. I mean, these figures are huge. Again, it says that Bitcoin fell 7%, dropped as low as $38,287. And then we're trading at 39,010 as of 4:43 a.m. ET time, according to CoinDesk data. Now, Ether, second largest crypto, dived 8% in the last 24 hours, trading at $2,878 as of 4:43, as low as $2,809.51 in the past 24 hours, according to CoinGecko. And we literally just checked ETH a minute ago, and it's at 2,760. So $147 billion wiped off. Okay, it's like the third time they've told us how much has been wiped off. It's a big number. We get it. The declines in cryptos follow Wall Street losses. The Nasdaq was down 5%. The S&P is into its third straight week of losses. It's the S&P 500. As the 10-year US Treasury yield spiked earlier this week, rising rates have caused investors to shed their positions in riskier assets. Yields move opposite to prices. The Fed Reserve has also indicated its plans to begin reducing its balance sheet, as well as tapering of bonds and raising interest rates. A common investment case for Bitcoin is that it serves as a hedge against risking inflation and a result of government stimulus. But analysts are saying the risk is that a more hawkish Fed Reserve may take the wind out of Bitcoin sales. As yields pulled back later in the week, however, foreign exchange trading firm Oanda senior market analyst Edward Moyer said it was a little disappointing to not see Bitcoin react more positively to the reversal in treasury yields. Bitcoin's prices have fallen sharply since November, tumbling more than 40% from a record high of $69,000. Some experts warn that the crypto market could be heading toward a downturn soon, as heightened regulatory scrutiny and intense price fluctuations dampen Bitcoin's prospects. So we've heard this in the news, regulators cracking down on crypto. China's completely banned all crypto-related activities, and US authorities are also clamping down on certain aspects of the market. Now, on Thursday, Oanda's Moyer had a prediction that Bitcoin could tumble below $40,000 as Russia's central bank has proposed a ban over the use and mining of cryptocurrencies on Russian territory, claiming the digital currency poses a risk to financial stability and monetary policy sovereignty. And Russia is among the top 3 countries for Bitcoin mining, he noted. That's huge. and they're, top 3 for mining Bitcoin, and now they're saying central banks proposed a ban over it. So it's not looking great. Does this kind of news scare you? I know sometimes it's not great to act on your emotions when investing in anything really, but what do you think of this type of news? Is it making you feel a bit bearish? You want to get your funds out, maybe put them somewhere else? Maybe you haven't invested in crypto and you're seeing this and you're sort of umming and ahhing. Let me know your thoughts in the comments below. While you do that, let me bring up the next article. So this one is from time.com and it says Bitcoin dropped below 39,000, hitting 5-month low. Here's how investors should react to the volatility. Okay, this sounds interesting, good. The first part of this article is just reiterating what we've heard from the CNBC. It dropped 8%. Around that. This is a cool little visual here. 1 week ago, Jan 13th, $44,000, 48,000 1 month ago, and 3 months ago, 66,909. So just 3 prices over 3 months ago, and you can just see the volatility. So if you're new to crypto, expect this kind of stuff to be happening because it is volatile. And then it goes on a little bit about the slump that we heard from CNBC, so I won't bore you too much with that part, but there is a bit I want to talk to you about down here. So what does this price drop mean for crypto investors? So for those that invest in the long term using a buy and hold, HODL, swings like this are to be expected. Big dips are nothing to be worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. I've been through the 2017 cycle too, Yang says, referencing the crypto crash of 2017 that saw many cryptos, including Bitcoin, lose major value. I know that these things are super volatile, like some days they can go down 80%. Now, experts recommend keeping your crypto investments under 5% of your portfolio. Now, is that true? Do you guys keep it under 5% of your portfolio? What do you think about that? Be honest, let me know in the chat. Maybe we do, maybe some of us we don't. It'll be good to see some feedback about that 5% target. Now, if you have done that, don't stress about the swings because they're going to keep happening, according to Bill Noble, Chief Technical Analyst at Token Metrics. Now, volatility is as old as the hills and it's not going anywhere, Noble says. It's something you have to deal with. As long as your crypto investments don't stand in the way of other financial goals and you've only put in what you're ultimately okay with losing. That's really funny when people say this, when people say, oh, only invest what you're willing to lose. It's a weird thing to say, isn't it? Because none of us want to just throw away money. So there's always a little bit of only invest what you're willing to lose. So it's kind of a little bit of a gamble. I understand the theory behind it. Don't gamble away money that you need for rent, mortgage, food, but at the same time you still feel hopeful when you put your money away, don't you? But it's an interesting saying that always makes me think, just be okay with losing. Just put money away you're okay with losing. But even if the drop is making you rethink your crypto allocations, same advice stands still stands. Don't act rashly or append your strategy too quickly. Reconsider what you might be more comfortable with going forward, allocating less crypto into the future or diversifying through crypto-related stocks and blockchain funds rather than directly buying specific crypto. Now, this is interesting. Don't check on it. Hands up who checks their crypto daily. Be honest. Okay, I do. I do. It's got, I have an interest in it. I'm passionate about it. I like to see what's happening. But here they're saying, don't check on it. That's the best thing, is to not check on it. I get it. Long term, forget about it. Set it and forget it, which is a saying that they say. And see it what it's like, a year from now, 2 years, hold it. But let's be honest. Do you check your crypto daily? Let me know in the chat. Don't let me be the only one. If you let your emotions get too much into it, then you might sell at the wrong time, make the wrong decision, says Yang. Now, this is a bit for people that haven't invested in crypto yet. Says, set it and forget it approach to crypto reflects his philosophy. So some experts feel crypto is too different from traditional investments to draw any historical comparisons. And that's why Ashira Nelson of Savvy Girl Money is staying well away. Nelson primarily invests in low-cost index funds because he can see history on that, he says. Newness of crypto and lack of trackable data make her very wary of these crazy swings. I get that, though. Even if you can look at these charts and you can see the history, you're just looking at the past. And that doesn't necessarily mean that's going to happen again. That's the future. Otherwise, we would all be multi-billionaires, wouldn't we? So I understand that as well, but I also see other people's point as well, saying, yeah, okay, great, you can see the history, but come on, what does that tell you? It gives a little bit of analytics. I get it. There's two arguments there. Which one are you? Let me know. And here, what's behind the latest Bitcoin drop? We kind of we said about it dropped from the CNBC article on how much buy, but again, it says volatility is tough for individual investors to deal with. Noble says, like Yang, he warns against selling too fast. Recent price fluctuations followed uncertainty over the country's lingering fight with COVID-19. So, blaming COVID-19. We've heard that. It's been around in news articles as well. New regulatory actions by the US government, as well as new legislation pertaining to crypto in the infrastructure bill. In an industry as new and unproven as crypto, it doesn't take much to drive those big swings in price down. And more generally, new short-term investors who are selling their holdings in reaction to the latest drop may be contributing to the drop in Bitcoin's value. So new people that have come to the market, have bought some Bitcoin or whatever and gone, yeah, I'm in. And all of a sudden they've seen it gone down. They've panicked and gone, quick sale, get it sold. A mass people doing that, it's going to drive the price down. And that is what they're saying in this article is contributing to one of the factors. According to Glassnode Insights, blockchain analyst firm. And then fluctuations are expected. Noble says he's surprised if by drops earlier this year, I thought the market was maturing and these things would be less frequent and severe. Boy, was I wrong, he says. That goes to show even some of these experts, they don't know. And you can try and predict and look at the past and the history, but let's be honest, nobody knows. Nobody knows. Some of these years, this year, drops have been caused by a combination of factors. Excitement about low-quality coins, to negative remarks from Elon Musk, to China's recent crackdown on crypto. This mix of factors has potential to make sell-offs all the more violent, says Noble. He likens the drop to stock market of 1987, from which the markets took months to recover, but crypto moves a lot faster today than equities did in the 80s, Noble says, and we may see a quicker recovery. Don't panic and puke, he says. If you keep your positions small, you can try to tolerate volatility. So what do you think about that article? Are you panicking? Are you holding for the long term? Are you thinking it's going to drop even more? That's what I kind of want to hear from you guys. What kind of feedback? Do you think this is going to be the end of the crash? It's going to slowly start to trickle up? Or do you think the crypto market is going to dive even deeper? Let me know in the comments below. Now, I've got another interesting article, one more. If you're still with me, awesome, throw me a like. And I've got a piece on Ethereum that I want to talk to you about. I'll bring that up. Okay, so we spoke a lot about Bitcoin and that dropping, but we also learned from the CNBC article that ETH dropped as well. And this article is from fool.com and it says 3 reasons Ethereum is plummeting. Should you buy now? Hopefully this will give us a bit of an insight. So key points. Ethereum price has fallen dramatically since November highs due to wider economic factors. Buying Ethereum now may be a good move if you understand the risks involved and make sure it's right for your financial situation. So it says here that the market slumped dramatically in recent weeks. We know that, and that's a loss of almost $1 trillion in 2 months. Ethereum, when reached an all-time high of $4,800, November 16 is now trading at $3,248, down about 33%. So why has it fallen so far and is now a good time to buy? Here are some reasons. Right, number one, the Fed plans to raise interest rates. Inflation is at 7% according to data from Labour Department, higher than it's been in 39 years. This is one reason the Federal Reserve is pulling back on its pandemic economic stimulus measures. It will likely raise interest rates in March and is tightening its quantitative easing program. Combined with fears about economic impact of the Omicron variant means people are looking for safer investments. Simply put, less money sloshing around, higher risk assets like crypto have tumbled. Number two, the whole crypto market is falling. Ethereum is not alone. Substantial price drops. Bitcoin, we know, has dropped 30% in the past 2 months, and Cardano is 40% down as well. Crypto derivatives can magnify, plus crypto derivatives trading can magnify market dips. So thousands of traders were forced to sell, called liquidation, because they didn't have enough to support their position. All right, Ethereum's competitors are taking market share. So it was the first programmable crypto, which made it the first ecosystem to host other applications and crypto projects. And it still hosts more applications than any other network and has the largest amount of money locked into its platform. However, it struggles with high fees and heavy congestions. You ever heard anyone say about ETH charges or gas fees? They can be extensive. In the process of staged upgrade to ETH2, and it's due to make significant progress this year. However, Ethereum won't complete that upgrade till 2023, still quite far away. Plus, a recent report from JP Morgan said Ethereum is already losing ground and suggested that its competitors may overtake it by 2023. Do you think that? Is that something you agree with, that statement there? JP Morgan said that Ethereum could be overtaken by competitors. You know, it could be Solana, it could be Cardano. What do you think? Can you see that happening? I mean, personally, I can't see it happening for a while because everyone's building on Ethereum, like everyone, even despite the high gas fees and despite other blockchains being faster and transactions being quicker, Ethereum still is the go-to. So I don't tend to agree with that, but that's subjective. Let me know your thoughts on that. Do you think something will overtake Ethereum, you know, by 2023? So should you buy? Now our ears perk up. Buying the dip sounds like a great investment strategy. We all want to buy the lows and sell the highs, but it isn't simple. If it was, we'd all be millionaires. Damn right. It's extremely difficult to know when an asset has hit its highest or lowest point, and it isn't clear whether Ethereum's price has bottomed out yet. So it's saying it could still dip further. So here's some questions to consider before we dive straight in and we think about buying Ethereum. Are you prepared for Ethereum to fall? So it may seem like a bargain today, but will you be able to stomach any losses if the price continues to fall? That's a good question. Some people have high tolerance for risk, but that isn't true for all of us. Crypto's investors need to be ready for extreme volatility. And this is relatively new and an untested market. And there are many potential hurdles to cross in the coming years. While there could still be huge potential upside, there's no guarantees prices will return to the 2021 highs we had. Now, if you're just new to crypto, this is the biggest thing. Have you done your research? And everywhere you see, you watch other YouTubers, you listen to other experts, they will always say, the good ones, do your due diligence. Make sure you research so far in depth. And then just as you're about to invest, do some more research because it can't hurt. And that's what it says here. Have you done your research? Putting your hard-earned money into any investment, you need to understand the project. The more research you do, the better. In Ethereum's case, that means understanding how smart contract cryptos work, how Ethereum stacks up against the competition, what impact Ethereum's upgrades could have, and how will it fit into your portfolio. Are you on top of your other financial goals? If you want to invest money in Ethereum or any other cryptos, make sure your emergency fund is in good shape. It's smart to cover any losses. Topping up your retirement savings. It's easy to look at the gains of 2021 and believe that the crypto can only go up, but these are still high risk investments and we don't know what will happen next. That's true. We don't know. No one knows. Are you investing money you can afford to lose? Again, like I said earlier, rent, food, mortgage, car, petrol, all those kind of things. Have you got a base for that? Is this money you can afford to lose? Because don't do it. Bottom line, Ethereum may be a solid move now, as long as you're doing it for the right reasons. If you believe in the long-term potential and you're looking to hold 5 to 10 years minimum, something like that, then long-term. If you're looking for a quick turnaround, you don't count on it, basically. But if you think it's a sale and you're spending money you need to pay next month's rent, you'd be better off holding your cash. There you go, team. We've gone through some of the news articles that we've spoke about today with the crypto crash. I'm not sure if it's a massive crash. It is a kind of like mini crash, isn't it? 9-8%. It's still a lot. It's still a lot going on. All the other cryptos seem to be in the red. Are you worried? Is this something that you think Should I get out? A lot of people are going to be asking that question right now. Should I get out? With all these countries like Russia and the top three starting to put a ban on it or wanting to put a ban on it, that's not good news. And then every day we saw a little bit of consolidation recently, but now we've got that crash, that dip with Bitcoin going down, then ETH as well. And then we've gone through a few articles there about some of the reasons why this is happening. Cheers COVID, and the Fed coming out saying they're raising interest rates. And then we've got, panic sellers also driving that price down. So are you holding? Have we got any hodlers on this channel? Let me know. And again, with ETH, do you think Ethereum is a good buy? This is not financial advice anyway, shape or form. We're going through the news. It's always great to listen to the news and find out what's happening in the world of crypto, because we can use that as a research tool to find out where we want to put our hard-earned money, where we want to invest. Are there any coins that you think are a great sale at the moment? Chuck it in that. Let's have it in the comments. Let's talk about it. So that's going to be it for our episode today. Very interesting what's happening with the markets at the moment. Maybe we'll see some positive news tomorrow. As always, if you like the video, throw me a like. Let me know all your thoughts down below in the comments. And once again, thank you for joining me for today, and I'll see you on the next one.